Good morning and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew and with me is Hiral Daria. Morning, Hiral.
Good morning, Alex.
Well, we're looking at the equity markets and we are heading towards the monthly expiry. But then the big headline today is not, in fact, equities, it is crude. Because since this morning, since very early this morning, you've seen a big spurt in Brent crude price, in fact, crude prices in general. And this could be largely on account of the sudden drop in inventories that you've seen in the US. The Cushing facility in Oklahoma seeing an inventory of 22 million barrels, which is in fact the low point since July of 2022.
Absolutely. And with this, the next level that everyone's actually watching out for in terms of crude is whether it will actually go to $100 per barrel or not. And if it does, what the sustenance will be and what's the impact going to be to emerging markets like India as well, because we're net importers, right?
And we've spoken about Hiral, very interesting, right? If you look at our social feed, and maybe we'll post it in the comments, just a short while back, I think if I'm not mistaken, yesterday or day before yesterday, we talked about crude derivatives and how that flow of price rise in crude feeds into the rest of the system. We were talking about it hitting in July, no, rather in December, in the December quarter and the fourth quarter as well. For quite a few of these.
Yeah, and clearly, so you will see that pressure that continues to build up in terms of paint companies in today's session. OMCs could see some bit of pressure as well in today's session. It's going to be interesting to see how these companies react and what's the overall impact. But coming back to the markets as well, clearly, Alex, if you see yesterday's session, clearly we were on a losing streak. 6 days losing streak is what we've actually broken. 19,700 is what we are tracking in terms of Nifty 50 as well. And it was mainly RIL that was actually fueling the rally. In fact, we were just having a conversation with a couple of analysts with regards to RIL, whether it was in the oversold zone. And from a fundamental perspective, analysts are of the opinion that yes, RIL has that potential to see that 15 to 20% up move. But it was HDFC that was on the losing end, right? So both these heavyweights are trying to play that balancing act out in terms of Nifty, and you have Bank Nifty that continues to underperform as well. In fact, if you see in terms of Bank Nifty as well, that underlying trend continues to remain weak. And overall, the phenomena that we witnessed in yesterday's session was that of short covering in the last hour of trade, and this was ahead of the F&O expiry, which is slated for today, as well as the RBI policy that is next week as well, right? So both of these are keeping the traders pretty much cautious and taking the truncated week into consideration, taking the earnings session into consideration as well, right? All of this is something that we will be eyeing pretty closely, and that's what will continue to lead to consolidation in the markets.
Absolutely. And clearly, towards the end of the session yesterday, we saw that short covering that took place and pushed the Nifty 50 very close to the high point of the day and pushed it above that 19,700 mark, kept it there. But I think in conversations we've had in the recent past, we've spoken about the fact that 19,800 will prove to be that first major barrier for it to cross, and 20,000 looks unlikely, at least in the near term. And certainly, with crude heading towards that $100 mark, that sentimental negative aspect comes into play.
Right, and people don't really want to take positions in this market. They're being cautious because, as we just mentioned, one, you have the earnings season starting in the next week or 10 days. You have the RBI policy next week. Today, you did have expiry as well. So they want to cover their positions and stay put.
Now, we do have a conversation lined up with an expert on crude to kind of give you a sense of where things are headed, why there has been such a big spurt. But while we wait for him to join in, David Lennox is joining in. While we wait for him, let's go and talk about a few of the stocks that you should bear in mind and watch out for in trade today. ONGC, so I'm told that we have in fact been joined by David Lennox, resource analyst at Fat Profits. David, thanks so much for taking the time, and I think opportune moment for us to request to speak to you yesterday because we've seen a sudden spike in crude oil prices this morning. Part of that, I think, has to do with the crude inventories in the US falling, but what else is at play?
Well, look, certainly when you have a look at the crude markets, the big factor that's influencing prices has been the fact that OPEC have kept their production levels constant over the last few months. The cuts that are supposed to be wound back haven't been implemented, and that's really what has given the the supply side a lot more tension when it comes to the pricing. When one also looks at the demand side, we've got China now with its small stimulatory programs starting to add up to a fairly decent stimulatory action. And with China coming back on stream a little more strongly, that's certainly uplifted demand for that country. Also inside the US, we would have expected to have seen with the demise of the drive season as their winter starts to set in, that we would see demand coming off for gasoline. We haven't seen that happening yet. It's remained quite robust. That's reflected in drawdowns of inventories in that country. And again, that's put some tension inside the pricing mechanism for crude. So overall, yes, we have seen a very good run, but the reasons behind it are quite valid, we feel.
Good morning, David. So, taking this into consideration, how are you looking at the near-term demand? Because taking views from a lot of analysts, they are of the opinion that the near-term demand does not look as strong as some of the indicators are actually suggesting, right? And if crude moves past the $100 per barrel mark, do you think that move is going to be short-lived, or it can still go up further?
Look, certainly on the demand side of things, we do think that, yes, there has been an improvement, especially coming out of China. That's where we've seen the big pickup in demand starting to swing into the pricing mechanism. Had China continued to perhaps labour as markets were expecting 4 or 5 months ago, then we wouldn't have seen such a significant uplift in demand forecast. So we do believe that that demand is there and it is growing. And certainly you only have to look at what's happening inside the US. We've seen inventories falling. Now, unless somebody's storing inventories up somewhere else, it does mean that there's being draws on those inventories. And the only way you get those draws is that it's being used. So one would suspect that demand looks quite, at this point in time, quite strong. And when you throw in, as I've talked about already, the supply side, that's really what has given the prices somewhat of an upward trajectory. In terms of the continued rise towards $100, we believe that it probably may be able to touch $100, but we don't think it will stay there for a significant period of time. We're looking at a range for us at between $90 and $95 for WTI, and just slightly higher than that, between $93 and $97 for Brent. The reason we're saying that is because if you have a look at OPEC, they really don't want to lose the pricing power that they now have over crude oil. If you cast your mind back just 3 or 4 years, the US was producing about 13 million barrels of oil a day, and they control prices. Well, there is nowhere near that amount of production going on inside the US now. And of course, OPEC have regained control of prices. If the price gets to $100, that's going to start introducing the marginal cost of US shale into the picture. And we can see that shale coming back on stream over the course of the months ahead. OPEC won't want that, so they're quite comfortable to probably keep the oil price, both WTI and Brent, somewhere inside the $90 to $100 range.
Just a last question then, and you've provided us the perfect picture in terms of the range that you expect. But in terms of key events to watch, you said that the OPEC Plus is not going to be very keen on losing control of that pricing. So if you gaze into the future and the remainder of this year, what do you anticipate they will do with the supply side then, anticipating that winter demand will come into play in countries in Europe as well as in China and in the US?
Look, certainly you've got to remember that OPEC at this point in time, it's all verbal. So they can very quickly turn around and say, we will increase production and we will wind back those cuts rather than we're going to keep production where it is at the moment. And that will have a significant impact. They can do that very quickly because they've got the mechanisms that will allow them to do that. So that's why we haven't really seen the oil price rush away and to already reach $100. It has been quite a sustained and controllable, we believe, rise in the price. So one would suspect that if OPEC come out and change their mind about production cuts and roll them back, then watch out. We'll see that oil price start to move to the downside. So that's probably the key indicator. Also, we are watching, obviously, what's happening inside China. Are those small stimulatory programs that the authorities there making, are they in fact adding up to one fairly big stimulatory program? We're watching to make sure that that continues to progress. And of course, in the US, you've got to continue watching those inventory drawdowns. So overall, there are those three factors that we're watching. And at this point in time, the key one is, what will OPEC say? If they say, yes, we're going to roll back production, then that's going to be an increase in the price as we've seen. If they come out and suggest that they're going to actually up production, then we'll see the price move the other way. So they're the three key factors that we're really watching out for to see which direction the oil price will continue to trend toward.
Right. David, a quick technical one. Clearly, if you see the near-term prices, they have risen relative to longer date contracts as well. So we are clearly talking about backwardation. Similarly, when we had seen a contango effect back then in 2014, 16, and 20, analysts were advising to buy crude at those levels. In what situation are we currently taking the way the spot prices are moving as compared to the futures?
Look, certainly I think, and you've suggested it already, there is still a lot of concern around near-term demand. So until traders become more confident that they see a better demand picture, then we are going to have those anomalies inside the futures prices. So that's what creates a market. We at this point in time suggest that we should be seeing a more normal pricing process inside the futures, and we would be picking up those short-term anomaly prices.
David, thanks so much for joining us this morning and giving us that perspective, certainly timely conversation with you.
Thank you.
All right, viewers, let's turn attention, as I was saying, to a conversation about the various stocks that you have to watch out for in trade. And let's start with, in fact, an oil explorer, ONGC. A couple of developments to talk about. Mika is joining in to give you the latest. Mika, good morning.
Good morning.
What are you picking up?
So there are two updates. The first one, it's entered an MOU with NTPC subsidiary NTPC Green Energy to explore the feasibility and setting up renewable energies in different domains. NTPC Green Energy's core business is power generation and involves offshore wind projects, green hydrogen, and energy storage technologies. The MOU has outlined a partnership between the two firms that in such a way that they will work together on renewable energy products in India and abroad, particularly focusing in offshore wind initiatives. Additionally, this will also investigate potential ventures in energy storage, e-mobility, carbon and green credits, nuclear energy, green hydrogen, and related products. This MOU is in line with ONGC's renewable energy objectives. The company aims to have 10 gigawatts of installed renewable energy capacity by 2030 and will invest rupees 1 trillion for the same. It also aims to achieve net zero emissions by 2038. Currently, the company has 189 megawatts of renewable energy capacity, mainly spread across wind and solar, with solar capacity at 36.52 megawatts and wind at 153. The company has also entered a crude oil sales agreement with Mangalore Refinery and Petrochemicals, which is the largest single location PSU refinery in the country. The agreement is expected to create synergies and aims to streamline sale and purchase transactions for crude. It is applicable till March 31st, 2024, and the agreement will mainly be related to crude oil coming from ONGC's Mumbai High Fields, which has an annual capacity of 20 million tons. In terms of stock performance, ONGC is up 7% this month and 24% year to date. And according to Bloomberg, the stock has 19 buy calls, 4 sell and 4 hold calls, and the 12-month return potentials, according to analysts, is 4%.
So that's ONGC, and the impact with regards to crude
Oil prices
coming to $97, $98 is going to be interesting to watch out for in today's session. Thanks, Mika, for getting us the details. But moving from crude, you have the telecom space that continues to remain in focus, and this is on the back of the July data that has come in. I think this is the highest monthly additions that telecom companies have seen as well in terms of subscribers. And Vodafone is going to be interesting because something that's working in their favor is their billing cycle notifications that all of us would have got in terms
All of us, no.
exact, or some of us probably at least was using Vodafone,
Some of us
right?
who are still using Vodafone,
Exactly. So in terms of Vodafone, clearly what they've said is, your bill due date, which was 15 days earlier after the bill date, has now moved to 10 days. Now, how is that going to impact from a cash flow perspective? And what the data from TRAI suggests, Rishi is standing by to get us more. Good morning, Rishi. What do you have for us?
Good morning. So, as you said, the total user addition was at over 26 lakhs, and specifically, Jio was the leader where it added about 39 lakhs, and that was the net additions that I mentioned overall. And then it is followed by Bharti Airtel, where the additions are at 15 lakhs. Now, for Jio, this is the 17th consecutive month of subscriber additions. And if you look at Airtel, it had discontinued its 99 rupee plan in February for 19 circles, which may have impacted the company's subscriber base. And this is also the 5th consecutive month where Jio has added more subscribers compared to Airtel. Then we have Vodafone Idea, which has lost about 13 lakh subscribers, which is much more than what it lost in June. And then we can have a look at the market share, where again Jio is leading over there as well, where it has added at about 0.25% of market share. Then there's Airtel again, which has added about 0.06% in market share. Vodafone has lost the maximum amount of market share at 0.16%. Now, Jio's performance on the rural front has also improved, where it has added about 2 million subscribers, while Bharti Airtel lost about 500,000 subscribers in the rural space, and it continues to have the highest urban to rural mix at 56%. Then MK also came out with a report on the telecom data yesterday, where it was specifically mentioning that with respect to Jio and Airtel, what is going to be key to look out for is the timing of the tariff hikes, because that is something that both the companies are looking out for. And they just have to time it perfectly, is what MK is saying. And with respect to Vodafone Idea, it's really important for the company to raise funds at the earliest possible so that it can invest in capex and limit the amount of subscriber loss. Now, as you said, it has changed its billing cycle to 10 days from 15 days, so it will improve its working capital and cash flows, but clearly it won't be enough for Vodafone Idea to limit the amount of subscriber loss that has been happening this year.
Yeah, and we're talking about capex, but before that, the dues that are pending need to be cleared as well, right? So capex becomes a long-term plan for the company.
Yeah, but despite all of that, we're still talking about Vodafone Idea controlling a fifth of the telecom market in India. Of course, it's losing.
The stock price performance has been spectacular over the last couple of trading sessions as well, right? So there is some bit of conviction, at least in the trader community, probably not in the user community so far.
Also, perhaps because of the ownership structure of Vodafone Idea, because of what has panned out over the past several years. But thanks so much, Rishi, for bringing us those updates. Let's focus in on more stocks that we have to watch out for. And among them, there is a significant development, and we've been talking about this, Cipla. And the latest update, of course, is that the company's promoters could, in fact, be looking to sell stake. Varsha is joining in to give us more perspective on that and a lot more. Varsha, what are you picking up first of all on Cipla?
So, as you rightly said, promoters of Cipla Limited are in advanced talks with two groups for the sale of controlling stake, which is valued at approximately $6 to $7 billion US. Now, this is according to media sources. Now, the potential buyers include Torrent Pharmaceuticals and Zydus Life Sciences. Another group also include BP, EQT, and General Atlantic. The successful bid by Torrent Pharma would position it as the second largest Indian drug maker after Sun Pharma. Cipla's promoter group, led by founder Yusuf K. Hamid, is seeking a valuation of at least 33,000 crores for its 33.47% stake. Now, in the event of change in promoter control, a mandatory open offer would be triggered, requiring the buyer to acquire up to 26% from the Cipla shareholder. The total amount required for the acquisition could be at least 51,000 crores. However, if the acquirer acquires a premium to the market price, more than 26% of public shareholders may tender their shares, potentially increasing the deal size to $7 billion. Now, one of the members of Cipla's promoter family may retain around 5% of the company as a non-promoter shareholding even after the proposed promoter exit. The sale is driven by lack of clear successor within the Hamid family to lead Cipla, as indicated by the investment bankers. Then next we have Tata Power. So the Tata Power Renewable Energy Limited, a subsidiary of Tata Power Company, will set up a 41 megawatt captive solar plant in Tamil Nadu. Now, the captive solar project will be commissioned 12 months from signing of the project development agreement. Within this new captive solar plant, the total capacity will expand to 7,877 megawatt. Then we have Dixon Technology, which has entered into pact with Xiaomi India to manufacture smartphones and other related products to the Chinese brand. Now, to be sure, this is not the first time that Dixon is partnering with Xiaomi to make products. Company has been making TVs for the erstwhile market leader since 2018. The company also manufactures smartphones for Motorola and Samsung. Now, the Dixon subsidiary is one of the few Indian companies who have received incentives under PLI. And the company has so far received around 110 crores as incentives from the government for meeting the incremental targets. Then we have NBCC, which is acquired to sell, which is the company is to sell 14.75 lakh square feet commercial build-up space for rupees 5,716 crore. This is through e-auction. Then we have Vedanta Limited, which is nearing a deal to sign off businesses into several listed entities according to the Bloomberg sources. Now, this, if successful, could help Anil Agrawal manage his metals to energy empire's debt load. Now, the company has informed its lenders of the restructuring and could announce the plans in the coming days. Businesses including aluminium, oil and gas, and iron ore and steel will be separately listed. Vedanta's parent, Vedanta Resources, will remain the holding company. Deliberations are going and no final decisions on the structure or timing of the demerger has been made. Now, lastly, we have MCX, which has announced the implementation of new web-based commodity derivatives platform that would interface with members for providing risk management, collateral management, and settlement-related services. Now, the effective date for implementation shall be on from October 3rd. In this regard, the Clearing Corporation has also planned to conduct mock session on October 2nd in order to allow members to connect and participate during the mock session.
MCX, in fact, on the back of a similar news, did see some strong moves. Cipla will be in focus. Vedanta as well, after the Moody's downgrade was under pressure. 5 to 6% were the kind of cuts. So now probably uptake. And Dixon has been interesting because Jeffries came out with a note, a Dixon versus a Amber, and their preference was an Amber. And in spite of Jeffries having a preference over on an Amber, Dixon actually hit a 52-week high. And if you see those last 3 trading sessions, Dixon has seen gains of almost 10 to 11%. So there is that conviction that continues with regards to Dixon as compared to Amber. Let's see where it moves from here on. But thanks, Parsha, for getting us the details. So we will be watching out for all of this. And the NBCC, from the broader markets, could see some bit of a up move in today's session. But moving on. The primary markets are back in action and we have our IPO man back with us. So Himansh, tell us, what do you have for us? We have Yatra, which is listing, and you have updates on the other ones.
Right. So Yatra is listing today and we are heading towards the close of the month, which has been very happening for the primary markets. Well, I'll speak about Yatra Online first. The shares are going to be listed on exchanges today with the issue price at the upper price band of 142 a piece. Now, the 775 crore IPO was subscribed over 1.5 times on the final day, and much of the chatter on the street was around the valuations of the company, which is very interesting because it has only one comparable, Easy Trip Planners, and the industry PE stood at around 56, and people were speculating why is Yatra trading at over and above 200, 250. Since this was partly because of the company recording its first profit of 7 crores very recently in the last fiscal, whereas the competitor Easy Trip Planners reported earnings of over 134 crores the last fiscal. Well, in such cases where companies are emerging out of losses and are in a very high growth sort of an industry, traders and investors tend to look at multiples based on other factors such as revenue, growth potential, industry outlook, and so on. So perhaps the valuations are warranted in some regard. But coming on to the subscription so far, Valiant Laboratories, which which opened its bids yesterday, has been subscribed 33% on day one. The company plans to use the proceeds for its Gujarat facility for specialty chemicals. And the bids are so far led by retail investors who are already 60% subscribed. JSW Infrastructure, the 2,800 crore IPO, has been subscribed 37.37 times on its final day, led by institutional investors who came in at the last day. 57 times is the kind of subscription we are seeing from them. And then we have Updater Services, where the IPO was subscribed almost about 3 times, led by institutional investors. It was worrisome on day 1 and day 2. It was off to a slow start, but it has managed to, complete its subscription. And lastly, we have some performances from Signature Global and Silks that listed yesterday. Both of them won up almost 19% premium over the IPO price, and Silks at about 11% premium to its IPO price. So let's see if the momentum in the primary market continues.
All right. Thanks so much, Himansh, for bringing us those updates. And that brings us to the end of this edition of Trade Talk. We did highlight at the start of this conversation that the big headline heading into trade this morning is not necessarily equity market. It is, in fact, the commodity space, and it is crude oil prices. So watch that very closely over the course of the day. Lots coming up, and it'll come right here on BQ Prime. So stay tuned.